Hi there, I'm Doireann McDermott and you're watching Dúchascopy TV. Well, today we're going to have a look at what's happening in the bond markets. And to discuss this with me, I'm joined by Daniel Varela, and he is Chief Investment Officer at Piguet Galland here in Geneva. So welcome to the studio.
Hello.
So we're going to take a look at US bonds first. Now, interest rates on mortgages and US Treasuries are hitting the highest levels in a year. Now, this is due to a 1 month plunge in bonds. Now, in terms of this, do you think we're seeing a bursting bubble?
I don't think it's a bubble. Of course, we've seen for the last 5 years wonderful performance in bonds. Of course, we've seen a lot of money going into bonds in the latest years. Of course, we see yields at really low levels right now, but still, I don't see a bubble. For having a bubble, traditionally, you need to see people taking loans, taking leverage to invest into these assets. I don't see that. We don't see any trace of speculation right now. So, of course, after wonderful performances we had these latest years, it's normal that we have people taking some profits. But still, I don't see yields backing up too much, because the fundamentals are still okay for the bonds. First, we have the monetary policy in the US that will stay very accommodative, with short-term interest rates staying very low. At the same time, we have the economy that is not growing too fast, and we don't have a problem with inflation. In fact, inflation is very low and still going lower. So it's really normal for us to see yields staying quite low, and I don't think this backup in yields will continue.
Okay, we'll just have a quick look at this chart. This is 10-year government US bonds. So do you want to go through what you expect to see after this?
So, for me, this is clearly profit-taking. We were at historic low levels with US yields. Now people see that the US economy is growing, not too fast, with no inflation problem, but still it's growing, and probably the second half of the year will see a growth between 2 and 3%. So I think that it's normal that yields go up, but as we have no inflation problem and inflation is going lower, probably we are not very far from yields starting to stabilize.
Okay, thank you. Now we're going to move on to Japan. So the BOJ has said it will increase its bond buying. Now, this is in order to tame volatility in debt prices. Now, do you think these extra purchases will actually make a difference?
Well, in fact, the fact the Bank of Japan is buying a lot of bonds right now is because they are trying to restart the economy, trying to get the economy out of this long deflation of 20 years, and they want to create inflation. And also they want to make people think that inflation is coming back. So it's quite normal that we see yields in Japan also going up. But I don't see yields in Japan going a lot higher, because still we don't see the economy booming. For the time being, it's just recovering, and inflation is still not a problem right now.
Okay, and let's have a look. So this is actually, I chose a 5-year scale to have a look at the difference. So it kind of has gone down and it's on its way back up. Do you see it kind of going in that direction?
Not so fast.
Not so fast.
It's
slowly.
been yes, slowly. It's been a backup that has been probably taking investors by surprise. The Bank of Japan is able to buy all the bonds that will be issued by the government in the next 2 years. So they will be able to control that trend. They want to make inflation expectations go up, but they don't want to see yields backing up so fast that it can break the economy. So probably we will see in the next few weeks the Bank of Japan trying to control the backup in these yields.
Okay, thank you. Now let's move on to Europe. Now, in terms of Europe, what is happening in terms of bond markets? Anything exciting? Any trends that we should be keeping an eye out for?
Well, in fact, we don't see domestic trends. I mean, we don't see why yields in Europe should back up because clearly the economy will stay very, very low. We don't see the economy recovering fast. Inflation is also really low and still falling. So probably if yields back up as they have been in the last few days, it's because it is in sympathy with the rest of the bond markets, namely the US bond market and also Japan, because investors take their benefits also in Europe while US yields are going up and also JGB yields are going up. What we are seeing too is the fact that investors are taking also some profits on what we call the convergence trade. The convergence trade is the fact that we have seen peripheral government bonds, namely countries like Spain, Italy, Portugal. These bond yields have been trending lower, converging towards the yields of the core European countries like Germany. Since the last few days, we also have been some profit taking on this convergence trade, and yields moving up a little bit on these peripheral governments. But in the end, I think that as the economy, the European economy will stabilize, probably the convergence trade will restart in the next few weeks.
Daniel, as always, it's been a pleasure having you in the studio.
Thank you.
Well, viewers, coming up next in the show, we will have Christopher Wasserman from the Zermatt Summit. But for now, have a great day.